Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday, August 26, 2013. We'll be looking at several different markets today, looking at the India Bombay Stock Exchange, and then we'll also be looking at U.S. markets. But the main thing I want to show about the India Bombay Stock Exchange is some things that may be tricking you or confusing, so I wanted to bring it to your attention. I also want to show you a particular pattern. We're going to start off looking at this chart by showing the pattern that we went into. We had this first shoulder formation, and you had the head formation goes higher than the previous shoulder, and you could sell off. And you had different ways you could have called this a sell. We did it by using the sell signal here, and then the confirmation followed. You could have also used this rising wedge formation that we talked about during that time period, and how once you had closed below that support line that had been support here and here, you would have been able to use that close below that as another sell opportunity. And then we had this nice move to the downside, made lots of money on that. At this point in time, we also had a buy. Basically, that doesn't mean we were bullish. It just means we expect a bounce at the situation. So we cover the short, we go long, and you'll see that this bounce here, it comes up here, finds resistance at the 50-period moving average. This is a negative sign. It's also negative because it peaks out at roughly the same level as you'd seen before. That gives you the head and shoulders formation. That's what we were talking about back when it was forming, and I told you one of the things that could happen was if we come up here, we stall out, and then we reverse and roll lower. We'd be looking at this neckline based on the low close here, draw a trend line between these low closes, and you'll see that is the neckline. And at that point, once you close below that like you did on that day, that's a sell. So you got the sell signal here again, and then you continue to look for the sell. Oftentimes though, now this move right here might trick people. Oftentimes after you've done that, you will come back up, bounce back up, and test that neckline. Neckline was providing support here, here, here. Then it breaks through, which means support typically transforms into resistance, which is what you see today. So you had this move comes up here, bounces off of it, and we basically have this particular candlestick for today looks more like a shooting star than it does a spinning top. And either way, neither one of those are bullish. So I'd be looking at this as another sell signal here, and I would still be bearish, still in a downtrend. This is still there's nothing, no series of higher highs or higher lows. There's nothing's changed here, so you need to stay in a bearish mindset with the India Bombay Stock Exchange. The other thing I want to bring to your attention here, whenever you look at this chart, you're going to see it starting to develop in the U.S. Look at this little move here, all right, and then we had this higher move, and then we come back up here, and we failed to come back up and test this high. We stall out basically, and at roughly the same point that we'd stalled out before. That's the telltale thing that you look for with a head and shoulders pattern. They don't always have to be level like that, with the high point of the first shoulder roughly the same as the other. They can be cattywampus and have one that goes a little bit higher like that, or one that goes a little bit lower. You can do like that, but most of the time they'll be roughly the same. So let's go look at some U.S. markets now. Okay, we're going to start off looking at the Dow Jones Industrial Average, and this one is a pretty simple move here. You were in a downtrend, you closed below that actual what's called 50-period moving average, red line right here. Told you when that happened, you were bearish, and it didn't matter how you slice and dice that. A strong bullish market will find support at the 50-period moving average. When it stops doing that, it's a negative. And also at that point in time, you have lower highs, lower lows, so forth and so on. So it's all very bearish at that point. And then we get this move here. And at that point, we're telling you this doesn't matter. You still have to test it. You have to come back down and see what happens afterwards. And we had various mixed opinions on that, but basically what ends up happening is exactly what we said. You have to come back down here and test it, and so that's what you've seen happen here, and that's fine. At this point in time, we're warning about these signals here. Whenever you have these sell signals at this point in time, typically what happens is you'll get a bounce after that anyway, and you'll get a better entry opportunity on the sell side. So you look for that bounce to come up here and give you some kind of a sell signal, probably at the 50-period moving average, that type of thing. Still looking for that, but something happened today which would argue that may not ever occur. And again, we don't know for sure, so we're just bringing it to your attention that this is something that still looks pretty bearish at this point in time because of these sell signals, because there's no hammer candlestick formation off the low and things like that. We did get a hammer candlestick formation last Friday, but then today's activity was very, very weak. And that's a problem because if we look at the overall chart formation, we can see you could draw this out like this. And this would be what you've already seen on the India Bombay Stock Exchange, where you come up here and you fail early. You don't go up here to the 50 period, you just fail early, because that would be roughly in line with the peak of the first shoulder, and that would make a lot of sense right there. If we come down here and take out this level here, again, that would be more confirmation of a bearish move and something you want to be selling again. It's still a sell at this point in time anyway, because you have the sell signals that are in play here and confirmed, and then your stop will be way up here because there's lots of room that could still bounce up here to the 50 and so forth and so on. But it's still a very bearish pattern developed right here. So keep an eye on this. It's a very tricky move. Another thing I want to point out is if we get confirmation like this and this head and shoulders formation takes effect, you'll know it when one thing happens. That'll be the neckline of the pattern is broken. So we have this first shoulder formation, the high close, if you will, low close down here, and then we make this move up here. This is the head, and we come back down, just draw like we're in kindergarten, and then we take it and we draw a line between the low close here and the low close here. We say, all right, well, that's our negative sloping neckline. If we close below that point, that would be a sell signal. You would take that as an opportunity to sell. At that point in time, you would look at the distance from the high point down to the neckline, measure that out mathematically, subtract it from the breakout point that you would see here, break out to the downside, so subtract that from there, and that's how much lower you expect price to fall before you would see some kind of a bounce or something like that. So there's something here that's very troubling for bullish investors in the market. Now again, whenever I talk about being bullish or something like that, I'm just talking about and we have a signal to an upside, and we have a, we're just looking at these as bounces at this point. We're not really looking at this market at this point as overbought as it is, and saying, oh, look, this is a new bull market. We're not even crazy enough to do that, but we are looking at the market saying right now we're getting some bearish signals in the market that are stronger than any bullish signals we're picking up. So right now, it's important that you pay attention to that. One more chart I want to bring to your attention, and the Dow Jones Transportation Average, or the TRAN. This is the one that we were bullish on, the one we chose to go long TRAN because we had the hammer candlestick formation after we came down and tested the 50-period moving average. That's a good sign for us, and we like that. So we wait for confirmation. We got that the next day. We say that's a buy signal. All of this time period was an opportunity to be a buyer, and then you get the breakout moves to the other side, and then consolidation. And then today we get a sell signal. Now that's a little bit early for me. I was looking at this, and now again I want to point out that when we're telling you about this buy signal, we were also warning that there's potential here for another head and shoulders pattern. Just really need to watch and see what develops, because we had this first shoulder, then you had the head formation that rose higher, then you came down, gave a lower close than you'd seen before, so that gives you a negative sloping neckline, and then you start to form this second move here. If you don't come up and break out above the previous high, then all you're doing is forming that head and shoulders pattern. Now I expected it to go a little bit higher and come up roughly the same level as the previous shoulder, but they can also fall short, like we're seeing may be happening right now. So at this point in time, I would advance the stop on this long position, lock in some gain, take your profits however you want to trade it, and then be looking and watching this sell signal right here. If we get confirmation of that, of course you take a sell opportunity there. In a situation where you have a head and shoulders pattern, the stop loss limit on that scenario would be based on the overall pattern. So you would look at this and say, all right, well, if we peek out here and we get confirmation the following day of sell day, I'd be selling that. My stop has to be here, because the argument is this is a topping pattern, and then at that point in time you would have this low, lower low, this high, lower high. So that of course is in line. Nothing's odd about that. You would be wanting to sell that at that point in time, but your stop would have to be set at the previous high. Okay, that would still make sense. It should be noted that there are several U.S. market charts out there. I'm only showing you a couple, but if you go to the free website, you can check them out there. I've already updated the charts showing that there's several different sell signals setting up as well, and also in other markets as well. And again, whenever you're looking at head and shoulders pattern, you can simply do the math and see once it closes below the neckline, if you get that close down there, it's a confirmed head and shoulders pattern. So if we close down here, we would simply measure this distance out, subtract that from the close, and we say test this low. For those of you who'd like to learn more about the technical analysis tricks that we were showing today, you can go to the technical analysis section here. You learn all the different things, head and shoulders patterns, etc., as well as stock trading methods we use. And then if you go to the bottom of the home page, you will find the global market charts are updated nightly with my short-term 3-month daily, as well as my long-term 2-year weekly charts, and then you can see whether we have bullish or bearish signals on them and so forth and so on, entry points and stop loss limits. And again, I have also advanced the stop on, let's see, it was silver, I believe. So be sure to check that out as well. God bless, take care, and I'll see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.